Welcome back to Political Misfits on Radio Sputnik, where we bring you news, politics, and culture without the red and blue treatment. I'm Michelle Whitty. I'm here with John Kiriakou, and we've got, as promised, some economic news. We're going to look at inflation. We're going to look at grocery prices. Spoiler alert, not great.
No.
Not looking great.
No.
We're going to look at some large government expenditures that are staying in the United States and the impact that they could have. We've got more from East Palestine. We've got Democratic primaries. There's a whole bunch to get into in the next half hour. And joining us for it is Steve Grumbine. He's the founder and CEO of Real Progressives and Real Progress in Action. He hosts the podcast Macro and Cheese. He's an activist and evangelist for modern monetary theory, which we find very interesting and compelling on this program. Steve, always great to talk to you.
Yeah, you as well. Every time I talk to John, and don't get me wrong, I love John, but I miss you, Michelle. How are you?
Thanks. John's the B team, you know?
Yeah.
No. He looked genuinely hurt there. I was just teasing.
Aww.
No, he's fine. He's fine. I want to talk about these new numbers yesterday about pricing in the United States. Apparently, this is the Federal Reserve's preferred inflation index, the personal consumption expenditures price measure, and it climbed 5.4% in January from a year earlier. That means an increase of 0.6% month to month. So the year-on-year increase was more than economists had predicted, and it was more than the December increase, which Axios notes was also just revised higher, and I want to ask you about that later. Stripping out what are described as volatile food and fuel prices, the price index climbed by 4.7% in the year through last month. This was also more than was expected in this Bloomberg survey of economists. And if you come back to groceries in particular, they rose by 0.7% between December and January, which is a big jump. The increase the prior month had been a lot smaller. And so, you know, I'm reminded of Joe Biden's State of the Union, which is just earlier this month, in which he said inflation was easing and there wasn't anything new to do. It was just time to finish the job on the economy. And so I want to ask to start, you know, what should these new figures tell us about the analysis that he was presenting to us not even a month ago?
Well, let's get past Joe Biden for just a minute. Let's focus our eyes instead on the way that we're, quote unquote, fighting inflation.
Yeah.
The way that we're fighting inflation is by raising interest rates. And, you know, as you stated, you find MMT interesting. Well, let's let the rest of the world understand why this is interesting. MMT will tell you that raising interest rates is a basic income for the people that already have money. It's just giving more money to rich people, okay? And as a result of that, these additional rate increases that are not actually depressing spending. People still need eggs. People still need, you know, electricity, or they still need bread. They still need whatever. Yeah. So they're still buying these things. Okay, just because prices have gone up, you would need to raise interest rates to such an absolute absurd level to really have an impact on inflation. And what's happening? I'm going to read something from Stephanie Kelton's Substack called The Lens, and it's a great piece. And I'll say the name of it after I've read the section I've got sorted out. She said, compared with its May 2022 estimate, CBO now estimates that over the next 5 years, the federal government will pay out an additional $644 billion in net interest. This isn't what will be paid back over that period of time. That's a whopping $3.879 trillion will be spent on interest payments. The $644 billion is the additional amount of net interest CBO thinks the government will end up spending over the next 5 years, mostly because of the Federal Reserve's aggressive interest rate hikes. Now, the rate hikes don't just hit the spending side of the government ledger. They impact the revenue side as well. That's because rate hikes don't just force the Treasury to hand out more interest income to bondholders. They cause the Federal Reserve to hand out more as well. That's because the Fed pays interest on reserve balances. And the more interest the Federal Reserve pays to the financial institutions with master accounts at the Fed, the less it remits to the Treasury each year. And that means reduced revenues and increases in the deficit. So what we're seeing, in other words, it doesn't really matter, the deficit's irrelevant, but what you're seeing is not only the deficit increasing, really exploding, while they're cutting spending supposedly, because the spending isn't going anywhere to help out. It's literally going to interest payments to the already wealthy. So during this time period, you're not going to just see increases in costs, you're going to see wealth inequality dramatically grow. And like I said, 644 billion new interest payments, but a total of nearly 4 trillion over the next 5 years in just interest on these bonds as well. Think about that. That's net new money in the hands of already wealthy people that already have it, while we're sitting there living hand to mouth. Just put that in your head. It's amazing to me.
I know, and so we talk about this a lot because, of course, you know, we talk to a number of people who say the way to bring down inflation, the way to, you know, also to be more specific, to keep sort of the prices for basic goods lower is not raising interest rates. It's a faulty mechanism. It doesn't work. It does a bunch of other negative things. And so I wanted to ask, you know, if there is going to be hand-wringing over this, you know, continued rise in prices that really affect regular people, you know, what is the solution? I have a bunch of answers in my mind already, Steve. I'm not, none of this is going to be sort of clear blue sky, but I feel like it's always useful to say, if we want grocery prices to be lower, right? If we want to not keep being surprised, oh, what a surprise. They're going up every month. That's not good for my political future. What could the government do?
Well, if you think about this, pretend like I'm staring at one wall right now, and every solution I have is on that wall in front of me. But there's a whole wall to my right, and there's a wall to my left, and there's a wall behind me. But the only wall I'm looking at is the wall in the front of me, and that wall in front of me is this toolkit that we have always known. It's institutionalized nonsense. But the people in power, the wealthy, the bond vigilantes, you name it, they all understand this inside and out, and they're licking their teeth, lips like vultures. I mean, you know, like wolves waiting to prey. Yeah. They know that this is work. So all Biden and Congress would need to do is turn away from the monetarist wall and focus themselves on the fiscal wall and pass a law basically saying, hey, the penalty for price gouging will be triple what you would have made from the price gouging, or quadruple, or 10 times, or something like that. Something extremely punitive that would make people recoil before they did this, right? The other thing that is very interesting to note is whenever you have institutionalized knowledge on one side, you have institutionalized reactions on the other. So the business community knows that once they start signaling, hey, we've printed money, blah, 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 the business side says, that's our cue to raise prices because they're expecting inflation. Yeah. Okay. Now, what if we just simply had a president and a Congress that wasn't on the take for capital, that was on the take for the people that voted, that supposedly voted for him? That's another story. What would happen if they actually served the people and put the onus instead on businesses not gouging? You know, hey, why don't you take a haircut during the slow time? Why is it that regular people have to take a haircut from whether they're going to eat or pay their electric bill or whatever? Why do they have to be the ones that always tighten up their belts? Why isn't it the CEOs and the corporations that tighten their belts and do it as well? And there's nothing happening there. Anyway, go ahead.
It's just there seems to be an element of theater to this also when you break it down. And I have a lot of other questions for you, Steve. But like, you know, the government is employing supposedly, right? If we take at face value that they really think interest rate increases are going to bring prices down. So we'll accept that for the sake of this argument that I'm going to make, which is that the government is just continuing to use these indirect methods to achieve something that could be achieved directly. And it's sort of like, well, you can't do it directly because that would be socialism and that would be bad. But if we do it indirectly, then that's capitalism and it's good, and it seems silly to pretend, right? If I if I don't poke John directly, but I pick up a stick and poke him with the stick, I'm still poking him with the stick, and it's silly to pretend that I'm not doing, you know what I mean? So it's like, well,
yep.
why not just do it directly, right? If you want to give money to the American people, just give money to people. Don't make it go through their employers. If you want to provide health care for people, just provide health care directly for people. Don't make it go through their employers. But there's just this this strata of people with their hands out who stand between, the inputs that we give to our government and what they push back out to sift through it all and keep everything before it gets down to the rest of us. And it seems like a very, on a sort of non-economic plane, just a very silly bit of theater, really. Like if you really wanted to do any of these things, you don't have to jump through these 5 different hoops that suddenly make it not socialist.
Well, let me just say this. I just did a show a little while ago about false choices. And I basically broke down the fact that they give us like 2 choices out of a million, and we fight to the death over a micro slice in between. And then we compromise on an already uber compromised position that is only like 2 degrees of the 360 degrees worth of options available to us. And so we end up fighting, and we never, ever get any traction. And we always wonder why we're stuck here. There's a great, great guy named Philip Morosky. He's from Notre Dame. If you get a chance, go out there and listen to it. There's a podcast called Symptomatic Redness. Mm-hmm. And Philip Morosky gives a absolute tour de force on what neoliberalism is and how it triangulates these bad decisions, how it forces us to make these false choices. Mm-hmm. And I think that is a lot of what you're seeing here. And I hate to say this, but I think that because people are looking for any other answer than this is theater, mm-hmm. because people are looking for any other answer than this is just nonsense that we're being left. We are literally holding the bag for all these decisions because they need us desperate. And the more freedom we have, the less malleable, the less willing we are to do their bidding. And so this is, in the end, a way of fattening capital, a way of fattening the already wealthy, a way of pinching down on the poor and making them more and more and more willing to do the work that they weren't willing to do during the pandemic. Mm-hmm. And now all of a sudden, we're trying to re-engineer society to get back to the capital order the way it was. We're trying to screw everyone tightly to make sure that capital once again has complete unfettered access to labor and complete unfettered access to whatever it wants. Yeah. And that's what you're seeing. This is the story, and it will be the story tomorrow, and probably another 6 years from now it'll be the story. It's just, how do you get everyone to lock in on that and recognize that no matter what the news cycle says, no matter what the headlines say, it brings it back to this core belief that business and the wealthy are good and the poor and the working class are here to serve them. Mm-hmm. And this is how we structure it, by using the trinity of austerity with interest rates, with fiscal austerity, and with the threat of layoffs, which is a large part of what these interest rate hikes are intended to do, is to bring about unemployment. And it doesn't actually need to bring about unemployment, but once again, it's an institutional bat signal that says, hey guys, start laying people off. We're raising interest rates. This is what we do it for. Yeah. Start laying people off.
Get in, losers. So we're shedding staff.
Mm-hmm. Mm-hmm. Yeah, exactly. Yes. Yes.
Let me ask you about something that I think provides like kind of a microcosm to watch this action play out, because it's not always extremely obvious. And so forgive me if this is a little bit wonky, but this is about the CHIPS Act. So Biden's Commerce Secretary spoke earlier this week on the CHIPS Act, which is this $53 billion investment plan to spur the domestic production of semiconductors. The money is going to go to manufacturing incentives for domestic plants. It's going to fund research and development. It's going to fund regional tech hubs and workforce training. And next week, we are expected to get guidance on exactly how to apply for these funds and what they can be put toward. Some key aspects of this guidance will be whether there are requirements to hire union labor or to agree to other collective bargaining plans ahead of time, and whether the government will do anything but request that companies don't take these subsidies and use them for stock buybacks, which of course just inflate the price of their stocks and bring wealth to shareholders and don't do anything about creating jobs or training people or building semiconductors or anything else. And the American Prospect pointed out in a story on this that the large firms that currently dominate the U.S. semiconductor industry have used past federal subsidies for buybacks. Intel, IBM, Qualcomm, Texas Instruments, and Broadcom together repurchased $249 billion of their own stock between 2011 and 2020. There are calls in Congress for CHIPS funding recipients to agree not to buy back stock for 10 years. But again, I don't know where this call is coming from other than from the likes of Bernie Sanders. I don't know how likely that is to come into the guidance, but this seems to me to offer an example of demonstrating how you can see on one hand Joe Biden and the people who voted for the CHIPS Act saying this is a huge investment in American manufacturing. This is going to bring back good jobs. This is going to support, support the middle class, et cetera, et cetera. And it has the possibility of doing that. But it also has the possibility of just sending another couple $2 billion straight to these companies to do whatever they want with. And so I wanted to talk a little bit about that. When you hand over resources to these huge companies without restrictions, I think you just end up exacerbating income inequality and these other problems that we've addressed that these giant packages are supposed to address.
You nailed it. I mean, this is all the bill says to do this, but there's no penalties if you don't do this.
Yeah.
And so the idea here is that we're all Boy Scouts.
Yeah.
And that we're all in this for the right reasons. There are bills that have gone through where federal money has gone to states based on fixing roadways, for example, federal roadways, federal bridges, things like that. And there is a certain encumbrance. This money must go to projects of this ilk, period. This money cannot be used for anything else other than this. And you must show that you've done this or the money will be taken back or whatever.
Yeah.
I don't see that kind of encumbering of dollars. I don't see that kind of structure ever put out there. In fact, I mean, going from Hillary's sternly worded letters and Obama sternly wagging his finger and so-and-so sternly writing another tweet or
Biden's tweeted multiple times about how companies shouldn't price gouge, and I feel like it's not taking effect.
It just doesn't have the same effect as law does it?
Yeah.
I mean, this is a feature, not a bug. Okay.
Yeah.
And, ultimately, what is really sad is that you see it very clearly. You've articulated it quite well. But the average person is so myopically partisan that they think, well, Joe Biden did this great thing. And this is a wonderful thing. And on the surface, it has all the air cover required to say Biden went ahead and invested to make sure that the supply chains for high-tech type things with semiconductors will never hurt America again because we'll have it produced here at home now.
Yeah.
So we don't have to worry about if another pandemic hits, shutting down, blah, 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 right?
Yeah.
I mean, I know, for example, companies like Cisco will say to their buyers, hey, we've got a one-year manufacturing window here. 1 year for something that used to take like 90 days. Okay. So supply chains are not fully back yet. But when you look at these kinds of investments, and we'll call it investment loosely, these kinds of investments, without having the teeth of actual, you must do this, this, and this, or there are severe penalties.
I mean,
without really doing that, there is no meaningful way of containing what they do with it.
Yeah, and this is why, people look at some of these big investment programs with some skepticism. It's not just because, I mean, maybe some of them just love to be Debbie Downers all the time. Certainly I do not. But it's a you know, they have the likelihood every single time of being a massive bait and switch. And I will say also, you know, yeah, I think sort of team politics is a pernicious problem in our society, but I'm not going to fault the American people. I would say before I fault the media that is supposed to be presenting this to them, right? Because I saw this, you know, kudos to the American Prospect, which is a great source of this kind of analysis, but they're not like a household name, you know? But I think,
Right.
you know, you could present, if the New York Times is presenting this, or USA Today, or the Washington Post, or CNN, or whatever, then people can understand how, you know, all of these supposedly, I mean, you know, I think everybody who's crafting these bills understands what's going to happen, right? So I'm not going to say across the board this is sort of well-meaning, but like how you can continue to supposedly invest in these great jobs and you know, great industries that are going to support a great life for Americans, and just deepen and broaden inequality. This is the way it happens, right? And it's not by accident. It's not a mystery. And it's not just a bunch of, you know, people who love to throw cold water on every good idea who you know, that's not the reason we're pointing this kind of thing out, right? It's because this is the change that needs to happen.
Yeah, I think this is an important departure, right? People have to understand and literally acknowledge the fact that without teeth, without audit, without enforcement, without regulation, okay, we are left to an entity or a series of entities that have one purpose and one purpose only. And you don't have to be an MBA grad to know that business's primary driver is to maximize profits for both the corporation and shareholder, period. That is literally their primary motive. That is their primary objective. They are paid based on that. They are rewarded in other ways based on that. That's how they measure the success of the corporation. That's how people decide what stock to buy, on and on and on. So to them, when the potential to fatten their bottom line comes up, or the chance to do something like a stock buyback comes up, they're going to do it 10 out of 10 times.
Yeah.
It is going to require literal teeth to prevent that kind of thing from happening, not a sternly worded letter.
Yeah. All right, let's talk about East Palestine for a minute. I yesterday had a question, which was, so the National Transportation Safety Board had come out with their initial assessment of what happened. Unsurprisingly, it appeared to be this overheating wheel, or you know, something in a wheel that caused the derailment. And the NSTB initially said both that it appeared that this overheating wheel caused the derailment, that the overheating wheel had been caught by several hotbox detectors, or at least, you know, one or two hotbox detectors on as the train was traveling, and that the crew of the train didn't do anything wrong by stopping it when they did and not before. And I was like, I don't understand how all of these things can simultaneously be true. Again, not trying to throw the crew of the train under the bus. I was just like, if everything is working and these alarms are going off and the train is not being stopped in time, what is happening? ProPublica might have an answer for us. Apparently, Norfolk Southern has a policy that allows staff from its wayside detector help desk, which monitors data from these track sensors, to tell train crews to ignore an alert when, and this is a quote, when information is available confirming it is safe to proceed. So they can tell crews to keep driving no faster than 30 miles an hour to the next sensor and see what that sensor says. This is from the company's rule book. They didn't respond to questions. ProPublica asked other major train companies if they had similar policies. 3 didn't respond. 3 said absolutely not. It's also worth pointing out that something similar happened on a Norfolk Southern train in October, also in Ohio, when a wheel was heating up. Mechanics couldn't figure out why. And the safest thing to do would have been stop the train, disconnect the wheel, which was dragging an unused engine, and restart. But that would have added an hour to the journey. So his supervisor said, just carry on. And the train derailed like 9 miles later and spilled thousands of gallons of paraffin wax in the town of Sandusky. So you know, we are not train engineers, we're not conductors, we're not safety board investigators or whatever. But I do feel like this is just another piece of evidence on the pile that shows that Norfolk Southern is cutting corners everywhere but into its precious profits. And I wonder, you know, as this picture becomes clearer, what you think people should take away from this unfolding disaster in East Palestine.
Well, I think you got a couple things at play. Going back to September 24th, 2018, Fortune reported out that Trump rolls back train braking rule meant to keep oil tankers from exploding near communities. Okay. Wow. And they knew this, right? And it was an Obama rule that required new brakes to reduce the risk of oil train derailments, causing explosions, spilling gas, et cetera. It was reversed by Trump. So these are regulatory policies that have been on the books that have been removed and rolled back, deregulation. Now, there is a certain group of people out there that feel that government should be out of everything, that regulation is coercion, it's force, and all this stuff. And that particular group of people has infiltrated through groups like the Pete Peterson Foundation and Fix the Debt and other industry operatives and lobbyists, you name it. And they've all kind of come together in the pursuit of making sure that big business has free rein to do what it wants to do.
Yep.
And the government has largely played patsy to that as well. Now you're seeing multiple derailments all at a time where it really is horrible. I mean, like really, really bad. I mean, the people in Palestine are really having a tough go. Status Quo News has done great on the ground reporting from the people, going and talking to individuals. It is a real tragedy, but it's a tragedy that could have easily been resolved. And I want to throw something at you, and folks can chew on this for a minute. But when they talk about regulations, usually the reason industry pushes back is because what do regulations do? It causes them to spend money on prevention. Well, prevention, there's no way really of telling if it worked or not, simply because, hey, it didn't happen. I guess it worked, right? Yeah. So it's hard to pay money today for something that may or may not happen tomorrow. And so this very, very short-sighted view allows the private sector to make a decision. We need profit. What if, hypothetically, mass transportation like trains, instead of it being left to all these private actors, like we saw the fiasco with the airlines over the Christmas holiday, what if these kinds of major mass movers of people were no longer private, but were nationalized and were owned literally by we the people as a public utility? There is no profit motive under the sun for the federal government. The federal government could ensure, as a part of a massive jobs program, for the maintenance and upkeep of every one of these things to the spec in the exact time in which those repairs would be required. Planned maintenance could be absolutely baked in as a line item on the budget. It would not be an issue at all. These problems, you know, while we can't prevent anything, you know, I mean, the world's a dangerous place. You wake up in the morning, you leave your house, there's danger. But these are preventable things. These are things that with any kind of basic safety plan, any kind of real meaningful engineering review of practices, there's nothing preventing us from making these completely safe to within the realm of our technical know-how and within the realm of our diligence of maintaining not only standards but maintenance.
You know, the other thing. So, sorry, go on, Steve.
No, I'm just saying the case is there. Yeah. Because of some perversion, some weird fetish of private sector being supreme, we watch the private sector murder people by cutting corners, when the federal government basically says, yeah, we're in the business of helping them do this. It should be the other way around completely. Yeah. It's a complete mind-bending exercise to watch this play out time and time again, and we act like, how could this have happened? Yeah. But we know how it's happening. Anyway, I'm sorry, that's it.
No, and the other thing that I would point out is that, you know, when you're talking about risk and the assessment of risk and what's acceptable, you know, you would have some input from the people whose communities these tracks run through, because those are not the executives who are making, you know what I mean? It's a different thing if you think, what's the level of risk I'm willing to bear for my water source to be tainted versus, you know, this community that I don't ever have to go to. We have two more questions for you, Steve, and I want to get through both of them. So I'm going to move quickly to the political fallout of East Palestine, because Politico has been. I mean, Politico is a great source of delight for me. They're always willing to run a story about how people are being mean to politicians. Today, it's this incredibly condescending story about Pete Buttigieg finally showing up in Ohio. And it starts off this way. It says, Pete Buttigieg rolled into this deep Republican village in his government-issued SUV on Thursday, looking to address the public uproar over this month's toxic train wreck. He found a community where the circus had arrived. And I just think, hey, man, if you didn't want to be greeted by a clown show, you should have gotten there before the clown show, Pete. You're late. And so but the other thing is, it is a clown show there. You know what I mean? Like, it is a political football. Absolutely. And there are a bunch of Republicans who are right now trying to figure out how can I use this train disaster without calling for regulations on the rail industry. And so I wonder, usually when you get eyes on your disaster, it's a benefit. I wonder if the politicization of this disaster is going to actually benefit East Palestine. And I wondered what you thought.
I don't think East Palestine wins here at all. But to be fair, let's look at this, right? Let's look at the series of fumbles. Number one, repealing the regulations that were there to make sure that the trains had the brakes, right? The right brakes, et cetera. These are basic things that were done by the government. Who was it? A lobbyist that pushed for it? I don't know. Was it a sweetheart deal, a payola? I don't know. But one way or the other, somebody thought it wise to weaken the restrictions and regulations on braking for trains. So the further down you go, Pete Buttigieg wasn't out there. This is the Transportation Secretary. He's got political aspirations for president. Yeah. This is a man who did absolutely nothing. He didn't even give a strongly worded anything. Yeah. He sat back and let this thing fester and fester and fester. And yes, there are political opportunists everywhere that are going to ignore that Trump rolled that back. And I'm no defender of Pete Buttigieg. I can't stand the guy. Yeah. But the flip side to that is that it's not partisan. They're both playing a game that both fattens and provides wealth to these major corporations, and simultaneously makes the victims the bad guys. Prove your problem. Prove you've got an issue. It's on you, little guy. You come up with the solution. Yeah. And this is standard, and it's disgusting. And interesting that Biden was in Ukraine while this was going on, not in Palestine, right? Yeah. So anyway, there's a lot to go there, and some of it is not fair, and some of it is incredibly fair. But in the end, it's just partisan BS, because both of them didn't do what they needed to do to protect the American people. Full stop.
I've got a quick question, if you don't mind. I'd like to ask you, Steve, about today's news that Marianne Williamson has announced that she will run against Joe Biden in the Democratic primaries next year. Williamson, of course, ran for president in 2020. She barely polled 1%. She was dropped from most of the debates. What do you think we're looking at here? Is she, I'm going to give you three options, and you can choose any or all or some of whatever. Is she the Eugene McCarthy of 2024, where McCarthy, who was a little-known progressive senator, announced his candidacy against Lyndon Johnson? He got 30-something, 33% in the New Hampshire primary and forced the president out of the race. Is she a non-factor, like the liberal Republicans who ran against Richard Nixon in the Republican primaries in '72? Or does her announcement perhaps open the door for a more serious Democratic candidate to challenge Biden from the left?
Yeah, I don't know if any of the above really capture what I'm thinking. I think this is more a matter of remembering the Becks. Remember the Becks court case down there in Florida against the DNC about the rigged primaries. Right. And the fact that the Democratic Party pulled out all its guns to say, in the end, we're a private corporation. We have no responsibility whatsoever to run a primary of any variety, and that we can hand select who we want to be our representative, and there's nothing you can do about it. And the court said, yeah, we agree. And that's the end of it. So everything else beyond that, to me, is noise. Marianne Williamson may very well be going out there as a mouthpiece to kind of give some visibility to progressive cover, to progressive issues. Maybe she's playing the role that Bernie Sanders was playing back in the day to kind of revive the flagging left that gave up on supporting after Obama proving himself to be a Republican in sheep's clothing. I mean, they basically had to find a way to get people to re-engage that weren't the standard corporate Democrats, the vote blue no matter whose. They had to find a way to get them in, back in the fold. So, is Marianne Williamson going to be anything? I don't see a big upside there. I mean, and whenever you can educate people, great. But the idea here is that no matter who's running in this thing, they are going to literally cave in, support whoever the nominee is, and that's the end of it. That's the way this plays out. And I think it's much ado about nothing.
Thanks for that, Steve Grumbine. Steve is the founder and CEO of the nonprofits Real Progressives and Real Progress in Action and host of the podcast Macro and Cheese. He's also a leading activist and evangelist for modern monetary theory.